Hi, it's Joe Duffy, Keypoint Market Analytics. Bringing here today a follow-up to our video presentation of a couple weeks back where we discussed the market adage, cut your losses, let your profits run. If you didn't see that video prior to this, I would suggest that you do that. The thumbnail is that, well, we do think that the adage has validity. We discussed some things based on our empirical research, testing hundreds, probably thousands of trading systems and indicators. And what we indicated in our last video was that stops, you do have to use them. They do have to be hard. They do have to be in the market. We do not believe that you can use a mechanical system or an evidence-based edge using very tight stops. What will happen is, instead of cutting your losses, you will end up with a long series of very small losses, which will be bigger than if you had used a reasonable size stop to begin with. On the other side, we talked about trailing stop versus profit targets, and we won't talk too much about that. Suffice to say that pay yourself while the market's going your way. What we're going to talk about today is a little bit about how to set your stops and how to set your targets. Again, everything that we're going to talk about is based on empirical research. None of this is my experience or what I think I see or seat of my pants. Everything we do here is based on testing, empirical research, and that's what we use for our conclusions. Hundreds of systems, thousands of hours of data, thousands of days of data, and that's why we come up with the conclusions that we're sharing with you today. You're looking at a screen right now of a Strategy Runner, which is one of the entry system platforms that we use. We've actually got a trade on. You can see right here we're long the euro at 136.73, and I have a stop now at 75. Now, when I went into this trade, my initial stop was under the low at 136.50. Right? So that gave me a 23-point stop for this actual trade. Now, what I do to set a target, we've got to set a reasonable target. Setting targets 3 or 4 times your risk will get hit so infrequently that you may turn a decent edge into a losing or marginal edge, and in fact you may turn a decent edge into a loser if you set your targets too far away. So initially here my stop is 23 ticks, and I set my target 1.5 times my stop. So 23 ticks basically plus a half of that gives me a 35 tick stop, which was 0.8, which is just above the highs. Didn't quite get hit today yet. Now, what I do and why I've moved my stop to break even here is I do never, ever move a stop to break even until a market has achieved at least 80, closer to 90% of the objective. Moving stops to break even too soon, it seems intuitively correct. Again, as we talked about last time, most things, if they seem intuitively correct, they are often not borne out by historical testing. So what we do is I'm entered here at 136.73. After the market has gone my way for 2 consecutive closes, and it doesn't really matter. This is a 15-minute chart I'm looking at, which is what I entered on. That's the smallest time frame I use, by the way. It's 15 minutes. It could be an hourly, it could be a daily I would use. But after I've got a couple of consecutive closes in my direction, I do not move the stop from here at 36.50 where it was up to break even. I cut that stop in half. So a 23-point stop now becomes an 11 or 12-point stop. And I leave it there. I leave it there even if the trade's profitable for a while. It's got 10, 12 ticks in it for a few bars. I do not move it to break even unless it's achieved 85% of the way to its eventual profit target. A lot of trades that are going to be good trades will back and fill. Again, evidence from testing shows us this over and over again. You should cut your stop in half or some approximation of there. Continually moving your stop to break even every time you have a little profit in it in the trade is a losing strategy. I know that's going to pop some belief systems, and people are maybe not even listening right now because they think that that's wrong. And like I said, the market is the exact opposite of what we intuitively think it is a lot of times, and this is a prime example. I want to talk about one other little tidbit that I've seen written a lot of times, and again, it's something that seems so intuitively correct. I'm going to trade a 3 lot, or I'm going to trade a 5 lot, and the first one I'm going to get out of everything or out of the trade to cover my costs on the whole position. Almost always, that's a losing strategy. Let me explain why. If you're trading a 3 or a 5 lot, or whatever lot you're trading, and you've got different stops or different exits, or any combination of which, each one of those different stops and different exits is a separate system. Let me say that again. Each one is a separate system. So if you've got a 5 lot and you're exiting one to cover your commission costs on 5, that's one system. You'd have to be taking that out and say, okay, my target's $50 on this trade and my stop's $300. You have to look at that as a separate system and see if it's profitable. If it is, great, fill your boots. Very, very likely it isn't. So when you see that philosophy proposed by someone, generally they don't know anything about trading. Okay, that's basically it. How can you participate with us? That's the last thing I wanted to mention here. Strategy Runner runs something called Strategy Exchange. I'm going to show you my trades on Strategy Exchange. This is the portfolio that we've been running in real time for the last 2 years and a bit. A $20,000 account is now worth about $71,000 and change. Our cost for our service is $200 a month. You get to trade up to 2 contracts total. We trade the Euro, we trade the E-mini, and we trade a little bit the bonds. The way it works is you choose any broker you want. Orders are entered through Strategy Runner. It goes to their servers, and then my orders are automatically transmitted to your broker, and they are executed. The whole process takes about 2 seconds. Okay, Keypoint Market Analytics is the name of our company. You can Google us on the web at keypointtrading.com, keypointtrading.com, or you can email me, Joe Duffy at keypointtrading.com, Joe Duffy at keypointtrading.com. Thanks very much. I hope this was of benefit to you, and we'll talk to you soon. Thank you.